It's just over 3 hours until the Brexit referendum polls close, and I thought it was a good time now to take a look at potential trading levels and how sterling could react to the voting results. Over the last 6 months, we have seen sterling trading sideways in a channel between 140 and 148. Down at 140, it was pretty much pricing in the Brexit. We had an overshoot at the end of February, down to about 138.50. On the at about 144, it was pricing in about a 50-50. Up around 148, people were pretty much pricing in a Remain vote. We've seen over the last week the market go from pricing in a potential Leave win with a big turnaround here. Look at this big hammer here, and that was an outside reversal. A big hammer turned around. We've seen cable explode to the upside as sentiment shifted back toward the Remain camp. What's interesting today, though, was that we had this breakout up above 148. It shot up almost to 150 and then came back down again. Not quite a shooting star here or a false breakout yet, but something we have to keep an eye on here. It looks as though clearing 148, the pair may have gotten a little bit ahead of itself, particularly because although the betting side had shown that people were starting to favor Remain more, thinking that Remain was more likely to win. On the other hand, the polls themselves have been very close. They've been neck and neck in the last few days. This race is still going right to the wire. This could still be a coin toss. So to send the markets really screaming higher was starting to look like it was going out on a limb. Some traders have started to come back in the last few days. If we did see a Remain win, it's possible we could still see upside in cable and build on this breakout here. First resistance goes back here to about 149.50. Here's the 150 round number. And I'll note back before all of the people started getting serious about Brexit, and it was back in December when the Bank of England decided not to raise interest rates because they were ahead of the referendum. Prior to that, cable had been trading in the 152 to about 158 range, just to note to everyone. If, however, we get a Leave victory, we could see the markets come back pretty swiftly and substantially because the markets now have priced in a Remain win. The surprise would be if Leave won. If Leave wins, first support around 146 probably would get blown through. Next support is the 50-day moving average around 144.80. The bottom of this gap here is around 143.90. This is 142, and then there's 140. And down here, this February low is about 138.50. The question is, if you saw a Leave win and markets go haywire and really volatile and the pound get crushed, the big question is, at what point would the central banks step in? Central banks that have already said they're watching the market, they're prepared to step in and if needed. It is pretty much all the major ones outside of the UK. There's the Bank of Japan, there's the ECB, there's the Fed, there's the Swiss National Bank, there's the Riksbank in Sweden. The G7 has claimed they're ready. All the central banks are out there watching this very closely. So if we did see cable get crushed, you could see the central banks come in. Why? Because if the pound goes down, then everybody else's currencies go up. That's the last thing Europe and Japan want. If the pound goes down and inflation goes up, if the euro and the yen explode to the upside, and then you're going to end up seeing UK exporting deflation to Europe and Japan, and that's the last thing they want. They're running these massive QE programs to fight deflation. The last thing they need is more deflation. The last thing they need is to see a suddenly substantially cheaper pound and making their own currencies that much more expensive when they're trying to stimulate to get themselves out of a rut. So that's important to remember. If you do see a sell-off in cable. So we're likely to still see quite a bit of volatility in the pair depending on how things go over the next few hours. I'll just quickly highlight some of the other markets that could be active. Pound yen is a big one, and it's already moved 2% today. It's this is the defensive. The yen has been the defensive haven of choice for a lot of people, and so this is the offense defense. If Remain wins and then we see some of the uncertainty go away, we could continue to see capital coming back into this pair. If Leave were to win and uncertainty increases, this pair could roll right back over again. It popped. It bottomed out here in this hammer candle. Not quite a hammer, but a sizable reversal. Traded as low as 145. Came back up, gapped up through 150 to start the week. It's continued to climb, currently hanging around 50-day moving average near 156.65. Support based on the bottom of today's candle, 153.40. Top of today's candle, around 158.30. So it's already trading in a fairly wide range. And this could be volatile. On an up move, 160 first resistance, and then about 164 and change. So this could be quite an active pair as well. And I'm just going to show dollar yen. Interestingly, by the way, I wanted to show euro pound for a second. Interestingly, the euro and the pound actually have not been that active relative to each other today. Pound is strengthening a little bit, but it's already come down quite a bit from 80 to 77. Now, if we did see a remain vote, the pound could continue to strengthen. That could take it down towards, this is about 75.55 or the 75 round number. On the other hand, a leave vote could see the pound weaken. The first resistance is in and around 77, and then up closer to 79 or 78, sorry, and then 80. And this one here, this shoulder resistance was about 79.35. So the last thing I just wanted to highlight here is dollar yen. Dollar yen is really important because a week ago, when the sentiment started to shift back from leave towards remain, we had gold hit 1300 and started to roll over. It came down. So capital was going out of gold as a defensive play and back into risk markets, but the yen held up. The yen did not see the capital outflows. The yen has finally started to see the capital outflows today, and you can see it here with dollar yen, which had been steady in this 103.30 to 105.35 range, broke out today. So that's the yen starting to weaken, the yen starting to crack. As I showed on the other chart against sterling, the yen was also starting to crack. So yen also on this move, and any shifts in sentiment towards risk on, risk off, uncertainty versus stability, the yen could also be a big trader on that today.